Hey, founders, Kirk Michie here. Hey, are you thinking about selling your business and you're wondering when to hire advisors, whether it's a business broker, a valuation firm, a financial planner to work through your stuff, estate planner, or tax attorney to think about what your net after tax might be, when to upgrade your accountant to somebody who might do more work with ultra high net worth investors like you might be, or just generally maybe when to hire the right attorney, when to move from your college buddy who's been doing your legal work to a full-blown M&A attorney at a big firm, or any other kind of adjacent or companion advisor. So the answer to this one is maybe simpler than you would think. First of all, where are you in the process? If you're not sure what the company's worth, the quickest way to find out is to talk to some experienced and active transaction advisors. They will have access to databases and they will know what's going on, especially if you're talking to advisors who have done deals in or are working on deals in your area. So maybe asking your Vistage group or your YPO group, or ask your CPA, or if you know an M&A attorney, hey, who's a good investment banker that works with companies of my size, right? Talk to a few of those investment bankers as part of their business development and ongoing kind of relationship building activity. They're not going to charge you to give you a range or a decent sense of things. Successful investment bankers do not need the nickels and dimes that come from valuation to be able to talk to you about that. I don't mean to minimize valuation work. There are some very, very good reasons like internal sales, sales to ESOPs, partner disputes, where valuation people are absolutely necessary. They're just not necessary for thinking about going to market. All right. And if you're going to market, talk to that same group of investment bankers about doing the research and giving you kind of a range and maybe even coming up with a buyer universe as part of the process of evaluating them. But it doesn't have to go all the way there. You might want to talk to your financial advisor first about saying sort of, how much do I need on a pre-tax basis so that net after taxes, I'll have sufficient capital that my investments will make sure that I cover my cash flow and I endow the rest of my life so that I'll never run out of money. Or how much do I need to be able to be somewhat financially secure or completely financially secure and fund my next dream? Those things are kind of net proceeds or capital sufficiency analyses. And those would be done by financial advisors. You can do it yourself, but financial advisors have great tools for that kind of thing. On the legal side, you don't really necessarily need to retain your attorney unless that's someone who's going to quarterback your deal until you're kind of into the process. The latest you want them is when you receive the LOI, and before you sign it, you want them to go through it. No matter what other advisors have gone through that document, no matter how much experience they have, you want an experienced M&A attorney to look at that LOI and look for areas of risk for you and areas where the LOI is out of alignment with market. But it might be a great way to find the right M&A attorney to talk to a couple of them about when to hire the other advisors and how much it's going to be over the process and when they're going to work a lot, like marking up the LOI, and then it goes on, kind of a quiet period for a period of time. When they're going to start working on the purchase documents and when they're going to develop the appendices and all of the related documents for the transaction, and when they're going to heavily be negotiating with the other law firm about those kinds of things. So you'll find that hiring the attorney is maybe a little bit up front and then a lot down the road. And then, look, for your accountant, talking to your accountant about whether there are tax smart ways to think about setting up your business prior to a sale, changing your residency well ahead of a sale, thinking through the what's called the gross up on an asset sale versus a stock sale. Working with your accountant on those things ahead of time could end up being money well spent. And certainly talking to your accountant about, if they're your business accountant too, whether they can do a sell-side quality of earnings. So there's different inflection points to hiring them, but hopefully that gives you some guidelines around what might be kind of best practices in a prescriptive sense. All right, stay tuned for more soon. Thanks.